Welcome to the Karma School of Business, a podcast about the private equity industry, business best practices, and real-time trends. I'm Sean Mooney, Blue Wave's founder and CEO. In this episode, we have a fantastic conversation with Trent Hickman, co-managing partner with VSS. Enjoy. I'm super excited to be here with Trent Hickman. Trent, thanks for joining.
Yeah, thanks for having me, Sean. Great to be here.
I've been looking forward to this one for a long time. We're going to touch on some, I think, really timely and really kind of value-added topics here. Before we maybe jump into some of the core of our conversation, though, I'd love to get more of your backstory. Can you share a little bit more about how you kind of came up, how you got into this industry of private equity?
Sure, happy to do it. So I grew up in Charlotte, North Carolina, which when I grew up was not quite the town that is today. It was maybe 200,000 or 300,000 people. But the city had two banks that were growing just super rapidly, were some of the real leaders in bank M&A back in the 70s, 80s, and 90s. So that generated a lot of interest and enthusiasm for financial services in general. And I wanted to be a part of that. So coming out of college, where I went to Duke, also in North Carolina, was natural to go back home to Charlotte and started my career at a place called First Union, which is one of the predecessors to what's now Wells Fargo. And that was really the time when a lot of the big commercial banks were trying to get into investment banking, and there was a lot of trial and error. So for a younger, ambitious guy that was interested in getting a lot of experience and exposure, it really turned out to be a great fit for me. So as a part of that work, a lot of what we were doing was investing in private equity funds back when banks did that. And as a result, we'd get a lot of the leverage finance business. And so I was fortunate enough to spend time with probably 10 or 15 different private equity firms there in the mid 1990s as the industry was really starting to mature. And the one I spent the most time with turned out to be VSS. So actually the first VSS deal I've ever worked on was a high yield bond deal for a cable TV company in 1995. So that gave me some early exposure to the industry, and I was really fascinated by everything they were doing, not just in terms of raising debt financing or even the M&A deals, but their corporate development plans and how they hope to work with the companies to build value. And I was fortunate enough to be able to see it relatively up close. And so when I went back to business school and was interested in throwing my hat in the ring, VSS was a natural first call. So I joined the firm in the summer of 1999, had a great experience, and essentially never left.
I love a lot of what you said there. One, just the roots going back to Charlotte. It's such a key kind of cornerstone city in this kind of like the new era of America where you're getting kind of these places of migration. I used to work with a gentleman named David Webb. If you ever ran into him, he founded Merrill Lynch's sponsor coverage group. He used to run their real estate group. Like one of the gems of gems in the world, who's just an incredible person. But there's this kind of ethos of people who grow up in Charlotte, where there's just kind of Karma School of Business, good people, do good things with and for folks, have this great kind of North Star I've always kind of seen from people who grow up there.
Yeah, no, that's great to hear. It's been interesting because so many of the kids that I grew up with, none of us are really kids now, but so many of us ended up ultimately migrating to New York and have gone on and had really nice careers. The joke in Charlotte is that there are no natives of Charlotte because most of us moved elsewhere, but our places have been more than taken by a lot of people moving down.
It seems like, in particular, Charlotte and New York, there's a great to and fro.
Absolutely.
I grew up in Texas. And so when I moved up to New York and then I was starting Blue Wave, I did a market study in terms of where to put the company, just because of I was trying to change the cost equation, which matters at a start from zero startup. It came down to Charlotte and Nashville, and literally it was a coin toss. It was really, really tough because it's an amazing place to be. And I can understand why you and others have become all successful because of the community and the ecosystem that's there.
Absolutely. Well, those are two great choices.
Absolutely. And then the other thing I liked about just kind of your backstory here is because of that exposure, it's such a banking town and a finance town. It kind of led you into this world. And when you joined, really the late 90s was, tell me how you think about this, but it was kind of like the beginning of the modern era of private equity in terms of like the industry really starting to pick up and mature.
Yeah, I think that's right. It's funny, still very entrepreneurial at that period, still is, but people just starting to think more creatively about how do I add value beyond just the initial trade. And was kind of the early days with some of the larger firms trying to add value through operating partner groups or consulting groups attached or semi-attached to their firm. And it's been really interesting to watch that increased specialization over time as good finance generalists have kind of recognized to compete at the highest level, they need to add expertise in business development or certain consulting or operational skills or financing and so forth, because there's just too much for any one person to do it all by themselves anymore.
I totally agree with that. And I kind of started in PE right around the same time as a rental associate within a private equity firm associated with an investment bank. And they would kind of grab us and get free labor out of us. And I would sit there and it's like, wow, I wish I was 10 years older right now. But to the credit for the people who had been in it for 10 years, no one even thought of that as a career or an industry. So to their credit, they saw something that no one else did. Hi, this is Sean. Wanted to take a quick moment to tell you a little bit why Blue Wave exists. It's based on this whole notion that assessing opportunities and building businesses is really hard. We all know third-party expert service providers can dramatically help, but at the same time, it's hard to know who's good. Usually leaving you like I would do and call friends and ask, do you know someone who does this? Or just go the square peg round hole route. So after nearly 20 years in PE, I decided to solve my own problem and created Blue Wave. Today, many hundreds of PE firms, thousands of portcos, leading public companies, private companies, all call Blue Wave to instantly get connected with the exact third-party service provider they want that's pre-credentialed by Blue Wave and perfectly calibrated for their need and really good. You too can give us a call or visit our website at bluewave.net. We're free to use and you can benefit the same way other top PE firms do. Back to the show. And so before we kind of move on to the next chapter, I'd love to go a little deeper into your backstory and the story of you. And one of the questions I like to ask is, we'd know you better if we knew this about you. So Trent, what would be one of those kind of tidbits of trivia or factoids that we would know you better if we knew you?
Yeah, I have a second job. So I'm actually a ski racing coach at a local mountain to New York up in the Catskills called Windham Mountain. So from the beginning of December to roughly the end of March, I'm spending all my weekends and holidays chasing a bunch of 13 and 14-year-old ski racers around the mountain and trying to help them go faster and hopefully not hit anyone.
Did you learn to ski once you moved up to the New York area, or did you have skiing experiences previously?
Believe it or not, I actually grew up skiing in the North Carolina mountains. A lot of my friends up here, it's interesting, didn't even realize that there was skiing in the North Carolina mountains, but a place called Beach Mountain is actually the highest elevation ski area on the East Coast. And of course, this was before some of the climate change or global warming. So to tell you the truth, the winters in North Carolina in the mountains were actually pretty similar to what we get now in the Catskills. And so I was fortunate my parents had a mountain house. And so every Saturday morning we'd drive up and parents send my brother and I off to the slopes and they'd relax during the day. We had a blast just exploring the mountain and trying to go faster or jump higher. And so it wasn't an organized racing program or freestyle program like they also have now, but just a lot of time exploring and kind of growing a love for the mountains. So I'm really happy to be able to keep doing that.
It's a great skill that you can follow for a long, long time in life. And I remember growing up in Austin, every year, once a year, for the spring break, the local churches would kind of sponsor these trips where we'd load into every parent's Suburban, any kind of bus they'd get. And we'd have these caravans that would go all the way up to Colorado. And we would Scotch guard our jeans, and we all wear like starter jackets. And generations of Coloradoans have now like just reviled Texan skiers because of that.
Yeah, no, I remember the Scotch card days.
Yeah.
Fortunately, the equipment's a lot better now, so it's a lot more comfortable, even if you get a really cold or even rainy day. I remember those days well.
For people who are listeners here, and maybe they have younger kids who are starting out, as a coach of kind of these really accomplished race kids, what would be one of the pieces of advice you'd say to get the kids on the right track?
Start as early as you can. I started my daughter when she was about 4 years old. Much prior to 4, they're maybe not going to learn a ton, but they can still get some exposure, and you can see if they enjoy being outside. To the extent you can, try to get in a program where there's really a focus on learning, but having a lot of fun doing it. It's kind of a cliche, but we're just able to learn a lot of these physical skills at 5 or 6 or 7 years old, just so much more quickly and also safely at that age. And if it's something they really embrace and you have close enough proximity to a mountain to be able to spend at least a season or two going every weekend or almost every weekend, it just makes a huge difference. You think about how much time you actually spend skiing on a typical day of skiing. If you go from first chair to last chair, you're probably only skiing 45 minutes or so. So it's something that's tough to really learn at a high level, skiing just 3 or 4 days in a year. Not everyone has that opportunity, but if you do, certainly embrace it and your kids will love you for it. And it's a great way to get out of the house and be active and be in nature during a time a lot of people are kind of cooped up inside and getting kind of antsy to move around. So it's something my family and I have really enjoyed now for a long time.
All right. Well, I love that. So, Trent, as we transition to the next phase of our conversation here, one of the things I always like the opportunity to ask people like you who have been really successful in this industry is what's kind of your personal scorecard, if you will, when you're looking at a company? And I think a lot of investors say, I'm looking for these general attributes of value, maybe not necessarily that they have, but they could have them if they don't. And then that helps you kind of make the world a smaller place. And so, what are maybe some of the things that you look for in a company when an opportunity comes across?
Yeah. For us, I think management is number one, if not number 1, 2, and 3. Just as a bit of background, we're a relatively small fund. Current fund's $530 million. So we're dealing overwhelmingly with founder-led bootstrap businesses. They're profitable. They've built some substantial value, but they're not huge. So typically between 5 and 15 million of EBITDA. And so with management, we're looking for a few things. Number 1 is high integrity. If you don't have that, then pretty much nothing else matters. There's kind of a great cliche, but it's a cliche because it's true, that integrity is really what you do when nobody else is looking. And as much as we like to say we're super active in these companies and we're on the boards of every company and we think we bring something to the table from an operational perspective, that's never going to be the same as working within the company 50, 60, 70 hours a week. That's kind of 1A. Number two, do we buy into their vision? Is it truly a shared vision? Sometimes I worry when management teams will say, well, gee, what's your vision for the company? And they're trying to figure out, hey, do we buy into that? It really needs to be shared. But at the end of the day, they're leading the company. So it's typically going to be hard for us to come in from the outside and say, hey, you're doing it all wrong. You should really be focused on this area instead of that. We might help them shape that vision, refine it, add resources to it. But it's at the end of the day, their company and their vision. The last 2 points really fall into what I call fire in the belly. Are they really hungry? Are they selling or taking on an investor because they're done and they want somebody else to carry the load, and they're staying on because their investment banker told them they have to? Or are they taking on an investor because they see an opportunity, but they need some combination of capital, maybe a little bit of courage, taking some chips off the table? It's uncomfortable to bet the farm, if you will, if 110% of your net worth is in that farm, which we understand. Do they have a lot of hunger for that next step? And is there really a desire to improve and change? Are they somebody that has a growth mindset and is open to suggestions? That doesn't mean just by rote do everything we say, but to onboard suggestions or ideas, think deeply about them, and then talk through it and figure out what makes sense and what may be an interesting idea, but really doesn't make sense. We'll make suggestions that fall into both categories. I think number two is really looking at market factors. The way I like to think of this is, for this particular business and its prospects over the next 5 or 10 years, is the wind at our back, and that's going to push us forward. And we have a chance at above average growth, even with average execution. Or is the wind in our face and we have to do an outstanding job just for a so-so growth result? The third area we look for is what I call multiple ways to win. So if I've got a strong management team, I've got the wind at my back, I should be able to get above average growth, not really doing anything too special beyond that. But are there obvious product line extensions? Are there obvious geographic extensions, add-on acquisitions, growth opportunities that, while we may not hit all 6 or 7 or 8 of them, if we get 1 or 2 or 3 and we do those really well, that should give us the opportunity for an outsized return. If we hit on more, then we do even better. Those would be kind of the big 3 for us.
I love that. So for our listeners who are coming up in the industry of private equity or are business builders that want to embrace the private equity way, do what Trent said. he just summed up thousands and thousands of hours of lessons learned really succinctly, I think, in a way like this is how you build companies with speed and certainty and efficacy. And so I really love what you said. It was a bit of a masterclass there. And the management team part that you said, I think, was so well said in terms of what you're looking for. It starts with integrity. If you don't have that, you might win for a little bit, but ultimately karma catches up.
If they don't have integrity, you better hope they don't have skill.
I think it's exactly right. It's so well said. But you have to have integrity before you can do anything else. But then you also have to have a vision about where you want to take the business. I think so many people think they're going to sell to PE because they can just like defer or delegate that. That's not what investors are looking for. They want to make sure there's alignment of vision, but you better still have that. Otherwise, it's probably not for you if you want to stay a leader. And then coupling that with hunger and a desire to win and change and improve, as ahead of probably where changes in the world are happening. Those are so important. As you said, it's the most important part of building a company is the people. And so I think you summed that up so well. And I really liked also with the market factors. So many people will try to push a rock uphill or divert a stream to go north up the mountain. Whereas, like, no, go where water is flowing easily. Because if you don't have product market fit, if you're having to force your customers to take your product, if the markets aren't growing with you, it's going to be a slog. And so, design your businesses in a way that go downhill.
Exactly.
You want to be skiing with the mountain, not up it. So,
Exactly.
and then don't only have one way to win because if that doesn't work, game's over. So I love that. That was really, really well said. I think it's great advice for anyone who wants to be in the business of business building. Hi, Karma School business listeners. Sean here. Wanted to shine another quick spotlight on one of the most important ways PE firms preserve and create value. The private equity industry is one of the most regular users of interim executives. Why? Because these select private equity grade executives can be hugely impactful for saving company value during critical times, accelerating strategic initiatives, and bridging executive transitions that happen to almost any company over time. To this day, many don't know that Blue Wave has turned the interim exec offering on its head and completely made it the way that my friends and I in PE always wished it was. Blue Wave has a dedicated team that does nothing but interview, pre-vet, credentialize, and reference private equity grade groups and people so that we know who you need before you call us. In the case of interims, we have more than 1,000 top interim private equity grade CEOs and CFOs that are ready to be matched for your exact need when you need it. Give us a call or visit our website at bluewave.net and we can give you excellence and alpha with ease. Back to the show. So Trent, maybe next, I'm curious, you've found a business where you've got management alignment, you've got the market factors at work, you've got multiple ways to win. How does VSS now kind of approach value creation? And what resources are you all offering to support these portfolio companies that are on their journey ahead?
Yeah, a few things there. And just to give everyone in the audience some context, I'd mentioned we're currently a $530 million fund, overall about $1 billion AUM. So in private equity land, I might call that kind of the awkward teenage years. We're sort of big enough to have real problems and through those problems, real opportunities from an operating perspective. But we're not a Blackstone or a KKR that can have 50 different operating partners with incredible specialization in each. And so to date, we have not employed an operating partner model, but it's something that as competition has been increasing, we are increasingly aware that we need to add more value in our next fund than we did our last fund if we want to have the same degree of success from a returns, money multiple, et cetera, point of view. So we've taken the approach of trying to bring on what I would call very best of breed third-party outside board members. I'll give you an example. I've got a business operating in the entertainment-focused payroll and production accounting software and services area. So the customers are big movie studios, production companies, and so forth. When we first got involved, it was on the smaller end for us. So a lot of the typical, hey, I'm 3 million of EBITDA, I'm growing 20, 30% a year. I've definitely got product market fit. I've got some sales momentum, et cetera. But I'm starting to deal with larger customers than I've previously been used to. And I'm also having some growing pains. So we were able to attract an outside board member, a woman who's a former chief human resources officer at Viacom. And so she both had some of the HR expertise, obviously very, very senior, very experienced in that area, but also really understood the serve market and even some of the buyers. And so we kind of compare somebody like that in that particular situation versus somebody who may have been kind of a typical retired CEO, good kind of general business person, but doesn't necessarily have that specialized expertise either in the HR or that particular niche serve market. So I would say in the significant majority of our investments, we'll try to find that needle in the haystack from a board perspective to add value in an area where we're just not going to have that kind of expertise. So that's one point. Number two, as you know, we've been a frequent customer of Blue Wave, and we really love the model that you've built because it's a good fit for us in terms of, again, trying to add really targeted expertise that is particularly germane to that situation. So you take something as simple as a market study. There are a lot of firms out there that do that kind of generically well. But if you take kind of that generalist firm versus a firm that's done 3 or 4 prior engagements in that space, then they can be more efficient and they can also go deeper and add some perspective that kind of a generically smart group of people could start to get at. But truth be told, it's going to take them longer. It may cost more, et cetera, and be a little bit less effective. And so for a lot of these situations, we're trying to really get the benefit of somebody who's seen this movie 3 or 4 times before, as opposed to us who may be coming into a situation a little bit cold. I think the third big area is that we've been very consistent in terms of the size of companies, in terms of the situation of companies that we invest in. So again, a lot of founder-led bootstrap businesses. A big part of our strategy is, I would call it massive skin in the game. We do a combination of both majority control and minority investing. We're roughly 50-50. The key point to us is that the management team, who we're really relying on to bring home the bacon, has an opportunity to make more when we exit together versus when we invested with them. And so our philosophy is, once the deal closes, that's great. Congratulations. Happy you have your nest egg and so forth. Now let's go try to double that the next go around. So we're kind of focused on the future rather than, hey, I got my deal done and I'm sort of heading to the beach, whether literally or figuratively in their own mind.
Yeah, I love what you share there, and it aligns so nicely with what you previously shared on your kind of personal scorecard. You can see the themes being consistent. And one of the other things I think you spoke about is something that we speak a lot about here as well, is this concept of specialization and the value that it adds, and trying to get as much as you can in that like Goldilocks zone. Because when I was having this idea to start Blue Wave, it was just so hard because I was like, gosh, maybe in 1999, outcomes and market returns were good enough. And then the market got increasingly competitive. And I would tell myself, and as I'm staring at the ceiling at 3 a.m, I'm like, wow, I'm swimming in a sea of beta and I need to be an alpha. And I think what you're articulating so well is like, you're going to bring the exact resource you need in a specialized, custom fit way versus trying to like square peg round hole things that was kind of good enough in 1999. It wasn't easy, but it was still good enough.
Yeah, it's really that combination of the pattern recognition. Hey, I've done 15 or 20 or 25 deals personally at this point. My firm's done a lot more than that. And what's a warning sign? What's an opportunity signal? And the combination of seeing that opportunity or risk and then having a really thoughtful way to deal with that and hopefully turn what may be a risk or a potential pitfall into an area that is ultimately a strength for the company. And I think where you get the really big outcomes it's frequently where you've solved a problem. There was some kind of shortcoming to the business that maybe scared some others away that let you, yes, get a good price. The initial trade does matter, but also it was something you knew the risk you were taking and you had a plan to address it that was reasonable and practical.
I think that's another kind of great mindset, this idea. I think so often in life we get encountered with challenges, and you can either do your best impression of an ostrich or you can run towards it and reframe it as opportunity. I think so well said and so important. So maybe with this kind of fluidity of business and life in mind, I'm curious, Trent, what are some of the pieces of advice that you and your colleagues are offering to your portfolio companies to manage through a time where there's a lot of change? And change is constant, right? It's one of the few constants we have, but it seems to be a little bit more of it these days. So what are some of the things that you're thinking and talking about?
Yeah, it's interesting because we've done a few deals recently that very much kind of fit into this theme of supporting private equity. And part of the initial thinking when I was introduced to the opportunities were, hey, you're a target buyer for these services. Do you really need them? And can you very easily see why these would be important? And I'll give you a couple of examples. We invested in a company called Lane 4, which is ostensibly a Salesforce consultant. They're based in Toronto, Ontario. They focus within some of the higher value areas of Salesforce. All that being said, there are a lot of Salesforce consultants out there. And I'm sure pretty much everyone that's listening to this podcast has dealt with multiple ones of them. And I've found in our own portfolio that the quality of data we get out of Salesforce and its usefulness in terms of understanding where are we really and what's the next quarter or next 6 months sales going to look like is of very questionable quality in many cases. And so what kind of attracted us to this business was that their go-to-market and the real substance of the business is really as a revenue operations consultant. And so they're focusing on not so much just the technology. The technology is just an enabler. It's how do we really address the problem? How do we really help the clients have good quality data? So part of that is a technical fix. And part of that is almost a change management bit of consulting. It's telling, I think, that a number of their senior execs actually come out of that discipline and have been VP of revenue operations at leading companies. So they're not approaching it from, hey, this new tech widget is really cool and I'd like to implement that. They're saying, I want better data. I want it more real time. And I want to be able to make decisions on that. And so that's actually a company, as you know, I'm very much looking forward to getting on to the Blue Wave platform and also really deploying across our portfolio. So that's one we're excited about. A similar theme, a very different business orientation, is a company called Treya that's already on the Blue Wave platform. And they are a boutique procurement consultant whose go-to-market is entirely private equity. And so they've built up a really nice track record with a bunch of private equity firms in kind of that 1 to 10 billion of AUM range. And the return on investment for the private equity firm and the portco is super high. It's guaranteed. And we've had some very good early successes with them as a customer. And so as we're kind of thinking about value creation and where I'd like to take our firm is having one or two kind of best of breed solutions that are part of our playbook. Then we can kind of supplement that and get new ideas from a Blue Wave or introductions from friends where we've got a trusted third party that can say, hey, this group's really good. So if you've got a situation where your Salesforce data isn't what it's supposed to be, or you know that there are cost opportunities, but you can't quite put your finger on it, and you don't have time to go run the procurement process yourself, go with one of these groups. So we're trying to do more and more in that area. And obviously, we're a big believer in the need for these services, not only for our own portfolio, but also for investments, because we see both having a long-term bright future.
I appreciate, once again, kind of the comprehensiveness of your thinking and your approach. One, it's how can we help others lift revenue? Pretty important. And then optimize costs, right? Welcome to business. And I think you're thinking about it in exactly the right way. And I also like the way that you're thinking about it in terms of like any business builder out there, whether you're a private equity investor or in the C-suite of a company or someone who's an entrepreneur, resources like you're discussing are accelerants. These people have figured out the tricks. And odds are you can probably, in an unconstrained cost and time world, you could probably figure this stuff out. But welcome to life. You don't have time. And so, like, why not bring in an expert who has figured these things out so you can do it better, faster?
And you know what's just super fascinating about both these companies, and obviously very different companies, although they're both, I think, best of breed at what they do, is that when you talk to customers and then when you refer them to others, overwhelmingly, it seems like the best management teams are the most embracing. So if you're the CEO and somebody introduces you to Treya, and it seems like the strongest ones say, wait, you mean I can get 2.5 or 3 times my money in year one, plus the long-term equity value pickup that hopefully is 10x or more as an EBITDA multiple, and I can get somebody else to do the work for me? Like, why wouldn't I do that? Or, hey, I can remove all that frustration of having data that is either not very good, or right before the board meeting, I'm having to go through and do this whole manual process to kind of clean it up. You mean I could just be able to, with my coffee each morning, pull up my Salesforce and say, wow, what a terrific day yesterday? Or, bummer, that one didn't close. Maybe I should get involved here. So we definitely kind of look for those opportunities both to invest in and to use for our portfolio, where the reaction is, well, why wouldn't I do this? And both those companies kind of fit that bill. By the way, we did have really outstanding experiences with our commercial due diligence providers that we've found on Blue Wave for each of those investments. Thank you for helping us get there on both of those.
And thanks. That's kind of you to also share there. I would just kind of reiterate where I love the clarity of your thinking, Trent, on this. And going back to the original part of our conversation, where you're looking for managers that have not only vision, but a hunger to, and a desire and a willingness to change and embrace and improve with more speed and certainty. And kind of what you're articulating made me think back to, like, even when I started this thing as a first time as an operator. And one of the things that I had to get better at was this idea that I figured out we had to do everything ourselves and figure it out ourselves. And there was like valor in that. And what I found out that concept was totally folly, because you just can't, sure, I could have, but maybe at the expense of twice the time or 3 times the time of what we were trying to accomplish. And when I finally kind of got over this whole thing of like, it's okay to A, ask for help, and then B, it's a weapon in a positive way, right? You can just force multiply yourself and get things done, more speed, more certainty, and bringing in the right resources. It takes an amount of humility to do it, but it's these humble, kind of high integrity managers that figure that out earliest, and they benefit from it. So glad you shared that.
Yeah, happy to do it. It's important to do that in the right way. Sometimes our industry can have people that may be a little bit arrogant when they're bringing in a third party. It's maybe handled in such a way that can make management feel threatened. as opposed to here's a force multiplier. My goal in life is to make your life better. And here's a group that can take a little bit off your plate and hopefully provide a really big ROI. And we all do better and hopefully have a little bit more free time as well.
It's like that old proverb. You might go a little faster over a short period of time alone, but you're going to go a lot further together. So why not embrace that? And Trent, maybe speaking of this like journey kind of concept, one of the things I love to get from folks from you is kind of like, what's some of the wisdom that you've learned over time? And really, and I ask these questions very selfishly, so I can just then continue to Frankenstein myself. But but if you were to go back to your 22-year-old self and give yourself a piece of advice that you wish you knew then, what would be maybe one of those things or some of those things?
Yeah. Well, I'd say a couple of things, and that they kind of go together. And I've been thinking about this a lot recently. I've got a high school age daughter who's in the throes of the fabled junior year and all the pressures and where am I going to go to college and all the angst and agita that goes around that. And I think sometimes the process that we go through, and most people in the private equity ecosystem, whether it's directly at a GP or a key service provider, investment bank, et cetera, are high achieving people. And we get into this kind of, I'll call it an assembly line mentality. I've got to have these grades and these scores in high school and go to that college. And then I've got to get this internship and so forth. And there's kind of this impatience to get to the next thing and so much anxiety about it, rather than being patient and saying, hey, what do I really want to get out of this? And what do I want to contribute to this beyond just moving up the next rung? And I think that kind of patience and really being open to those new experiences and what you can learn from those that kind of go beyond the next credential is just super important. And kind of related to that is really enjoying that journey. This whole ecosystem, whether it's the entrepreneurs, a lot of the specialized consultants and so forth that we've been talking about, are incredibly accomplished, interesting, fascinating people. I'm kind of always amazed by the entrepreneurs that we work with, and even some of the ones that unfortunately we didn't get the chance to work with, where they had an idea that today may seem obvious, and they encountered some kind of a problem in life, and rather than just kind of whining about it, they decided to do something about it. And having the opportunity to work with people like that and understand their stories and what drives them. If you can't have fun doing this, you can't really have fun in business, is my view. So really taking the time to get to know people on a personal level. Yes, you want to understand the business. You have to understand the business. You've got to do all the work, but we're fortunate in that we have a lot of control over who we work with. And it just seems silly to me not to kind of take advantage of that just for fun.
I love that. It's a great piece of advice. And it really resonates. I think a lot of us are kind of cut from the same cloth, where you have this unresistible blur and need to collect ribbons and badges and medals. And you're just proceeding from one almost imperceptible waypoint to the next. And taking that moment to say, you know what, you're so fortunate to be included and surrounded by some pretty amazing people. If you just take the moment to look left and right and maybe pause a bit.
Right.
Like, whoa. So that's really a great piece of advice, and kind of in keeping with our original part of our conversation about your role as a coach. One thing I in particular learned with my own kids, who are probably cut from a similar cloth on their kind of like blur that they're on, is I've learned that particularly from teaching my kids how to ski, it's often better if I don't teach them Get a coach. So I'll be sharing this clip and this episode with my kids because I think they're going to listen more to you than to me.
Yeah, it's funny. I mean, there are a lot of parallels from coaching to working with CEOs or management teams and things like that, and where sometimes people do need to experience things for themselves, and that's okay.
Yeah, usually by the time I've learned a lesson 3 times, I've got it. But fourth for sure.
Fourth time's a charm. There you go.
All right, Trent. Well, this has been a really, truly kind of awesome conversation here. I appreciate you sharing really a bunch of things that I wish I knew before and I never did. And with that, that's an incredibly generous gift. So I want to thank you for taking the time, imparting some of the lessons learned, the insights, the nuggets of wisdom here with us. I think they're all incredibly value added, both now, but also over time. So thank you so much.
Terrific. Well, thanks so much for having me. It was a real pleasure.
That's all we have for today. Special thanks to Trent for joining. If you'd like to learn more about Trent Hickman and VSS, please see the episode notes for links. Please continue to look for the Karma School of Business podcast anywhere you find your favorite podcasts. We truly appreciate your support. If you'd like what you hear, please follow, 5-star rate, review, and share. This is a free way to support the show, and it really helps us when you do this, so thank you in advance. In the meantime, if you want to be connected with the world's best-in-class private equity-grade professional service providers, independent consultants, interim executives that are deployed and trusted by the best business builders in the world, including many hundreds of private equity firms, thousands of their portfolio companies, and you can do the same whether or not you're in private equity, give us a call or visit our website at bluewave.net. That's BLUWAVE, and we'll support your success. Onward.